Right, good afternoon then folks, as we head into US trade on Tuesday the 18th of July. We're going to look at the markets and see what is going on after we have had some earnings from the major banks. Now, a couple positive, couple negative, but the interest rate situation, where there's high interest rates, obviously is positive for banks. And a lot of the larger banks suggesting that the interest rate hikes are helpful towards their profit. We had a number of the large banks out last Friday saying that these higher interest rates are proving positive for their profit margins. But we are going to move in after we've seen a lot of the large banks out. We're going to move into a period of kind of banking earnings releases that are going to come out. A large amount of the smaller banks, we've obviously seen a number of them proved a couple of them go bankrupt over the course of this year so far. So a lot of them are kind of reliant on a lot more kind of lending, which is a little bit more tricky for the banks to deal with. Obviously, you're relying on people paying up and not pushing back payments for any of these. For any of these payments. So, markets not really having a great time of it when it comes to digesting these earnings. But I wouldn't read too much into it just as of now. This kind of markets or the news sources thinking of something to speak about. Apart from that, we are into a lot of the earnings reports are out next week. So this week, not the largest, not the kind of the busy week in terms of the earnings releases. That will be next week. So we will keep a lot more of a keen eye on that into next week. Apart from that, we've not had a lot of fresh headlines out over the course of this morning. A lot more of the same since this morning's video, which we had a look at this morning. Now, if you come across to the grid, the stock indexes are still somewhat under pressure. We can see North American equity futures, European equity futures, Asia Pacific equity futures mainly lower across the board, albeit not by that much. You can see all small percentages all the way up and down here in terms of the percentage changes. Apart from that, you can see bond yields slightly lower across the board. Obviously in line with that struggle for growth situation. US dollar pretty mixed once it comes around to the retail sales today. We'll have a look at that once we get around to the calendar. We see Aussie, Kiwi, CAD relatively low. We had some Canadian inflation, which we'll have a look at now in a minute, and that Japanese yen trend continues to push forward. The Japanese yen continues to strengthen, which has been a theme in markets over the last couple of weeks, and that shows no signs of slowing down just yet. Swiss franc up slightly as well, probably off the back of these two with their lower interest rates and yields. The yield differential tightening across the board in relation to these two currencies, but mainly the Japanese yen. That has been a focus of markets over the last week or two. Apart from that, as you head into the data, you can see Canadian inflation. We'll start with Canadian inflation. You can see the headline print year over year, previous 3.4, consensus 3%, actual 2.8. Now, with 225 basis point hikes at the last two meetings, they did suggest that they were not going to hike rates anymore, but they were going to be data dependent going forward. Now, this inflation print with the headline figures below consensus. The monthly headline figures is below consensus. You can see the core CPI print year over year, previous 3.7, consensus 3.5, down to 3.2. You can see the core CPI in terms of the month over month minus 0.1. So this really does little to suggest that markets or that the Bank of Canada is going to continue hiking interest rates. This is no reason to continue hiking interest rates. This is a pause and see what your current interest rate hikes have already done. So that is interesting when it comes to this. Probably may spark a wave of fresh Canadian dollar selling. So I do think keeping an eye on the Canadian dollar in the coming days and weeks ahead is probably worth your while. Apart from that, you can see retail sales out of the US. Now, consensus 0.5, actual 0.2. Excluding automobiles, the monthly figure, consensus 0.3, actual 0.2. So a miss on the headline figures there. In terms of a percentage retail sales, you can see here 1.49%. In terms of the yearly figure, year over year, consensus 1.6. Actual 1.49, again dropping down. Now the one outlier here is retail sales excluding gas and automobiles, which can be a very volatile component of the retail sales figures. That has ticked up slightly, so not all doom and gloom in terms of that. Maybe that's a slight reason for some upside in the US dollar. Now a bit of downside in this kind of goes in line with that slowing global growth theme that we had that's kind of been going through yesterday and today. With those weaker than expected Chinese GDP figures, this kind of plays along with that. And if consumer spending starts to slow and then starts to slow a bit more rapidly, that is a situation where the economy will will kind of react negatively to that then going forward. You got a few more medium impact releases out over the course of the US session today, so keep an eye on them, but really a pretty quiet economic calendar on the whole over the course of this week, apart from UK CPI in the morning. In terms of the US dollar, has strengthened slightly, strengthened a touch since those retail sales figures, but it has kind of met back in the middle, so not much price action from Aussie, Kiwi, Euro, Sterling. You can see dollar Swiss, dollar yen really kind of just chopping sideways. Dollar CAD has popped higher, bit of weak Canadian dollar, bit of weak Canadian data, a bit of weak US dollar data with a bit of positivity mixed in there, but really nothing to see here across the US dollar in terms of the immediate reaction to that release. Slight bit lower on stocks. You can see the S&P, the Dow Jones, the Nasdaq and the Russell all popping lower, but now they're pushing back higher to meet back in the middle. So bit of a nothing release in terms of the data this morning, or this afternoon so far, sorry. Not really much to see there. You come across the bond yields and they are pretty unchanged, so that hasn't really affected too much today. Not a lot of direction over the course of this week so far. It's probably likely to continue into the rest of the week, but sideways price action to start the week. Monday and Tuesday all the same. We head into US trade today. We did have a pop higher in stocks yesterday in US trade. Markets have got nothing better to do. We'll probably go long stocks, so something to keep an eye on. You are failing up through these highs, so I wouldn't be going long with any sort of size. You want to take a punt at some longs, go ahead, but we are failing up at these highs. There's a bit of negativity in markets over the course of this week with that Chinese story. Now with these earnings, from the banks, potentially being not great going forward. Markets trying to digest how Q2 or Q3, should I say, will pan out for the banks. Really is a lack of clear direction, and we're awaiting fresh drivers to give us that next leg up or another leg down.